Okay, now let's continue. I think we are live now on YouTube. All right. So what I'm saying is that now this is price. This is my price. Price is actually this let's say G1 time frame. If you are looking for this market, you now if you have not entered, if you're not in this market already, you'll be looking at price coming back to this moving average, to touch the moving average. If it touches the moving average and it did not break above, then you should enter, engage yourself. Engage yourself. And when the market when the price, like the bullish candlestick, have come to touch this moving average, that is where you can actually go to a lower time frame and start looking for opportunity to sell. Because now we say this is D1. Now let's go to H1, for example. Actually, no, I don't know the time frame you went to that you were complaining, but I've always said it in this class that if you're doing analysis in a D1 time frame, you should go to 2 time frame lower. That's what I've always said. 2 time frame lower. So I'll go to H1. Now, when I went to H1, look at the price now. Look at what is happening. The H1, have you seen that? Because that market told me that D1 is selling. Now look at it. This market now is below in H1. This market is below this moving average, which is the 50 period moving average. Currently, the market just touched the 50 period moving average and it came down. Now, at this point, now you are monitoring what the price is. Somebody that's an aggressive trader would have entered this market for a sale and take above this 20 period moving average as a stop loss. Above this 50 period move, sorry, this 20 period moving average as a stop loss. If this market starts selling, it is aligning with the higher time frame. It's aligning with the higher time frame. So that is what you do multi-time frame analysis. That H2 D1 is selling. What you do is not that when you come to H1, you start selling immediately. No, you might come to H1, the market is buying. That buying, it is buying to a resistance to start selling. So as to align with the higher time frame, I have said this. It is buying to the resistance to start selling. So if you have plugged in your support and resistance or your native levels or your area of value, you've plotted it on your chart. As that market is selling, you are waiting because the higher time frame has said sell is a sell market. You should not come to a lower time frame and start buying. Even if you want to buy, know that you are buying counter trend. You are buying against the trend. So what you do, you buy short, identify your resistance. You're buying to that resistance and going out. At that resistance, when the market gives you opportunity to sell, then you know that you are on the trend because the high time frame is selling. So you engage yourself. So that is what we're saying. At this point now, if you come to this H1, you're looking for opportunity to sell this market. Like aggressive traders, people that have high equity would have entered here, scalpers would have entered here now. This week that this has done now, we'll just give them like, this might just be 10 to 15 pips here now, this thing you see here now. The people like somebody has gone out of the market, which is $100. But we're not saying you're a scalper, we're not saying you have equity, no. What you're saying is that, look, this thing means that you should look for opportunity to sell, not to buy. So you don't get confused if D1 is buying and H1 is selling. No, that H1, it takes 24 candlestick to do what one candlestick is doing in D1. You must understand this. It takes 24 candlestick in H1 to do what one candlestick is doing in D1. So in that instance, you will always see a swing up, swing down. That thing means that whenever you are seeing that buy in H1, since you've identified that the market is bearish in T1, anything you see as a buy in the smaller time frame, it is buying to a resistance. Once you get to that resistance, engage the sell. When you have seen a candlestick pattern telling you to sell, sell it because it's aligning with the higher time frame. You are on the trend. But that person that is buying is not on the trend. So don't get it twisted. Don't get it twisted, because if you do this now, the next thing you see minus on your account, you just feel like, this thing is not working. No, that thing that is happening in a lower time frame is just a pullback of the original, of the higher time frame. Sorry, lower time frame. It's just a pullback of what is happening in the higher time frame. Do you understand?
Yes.
Hello?
Yes, I do.
Yes, so that's what we're saying. So we are using what the market is doing now. So we're just looking at the market is bearish, yes. So whatever this thing is doing now, even if I want to sell this market now, I will sell it to this other block first. I'll sell it to this other block or this native level here. I'll sell it to this other block or this native level here. Then I'll look at what is happening. But because the higher time frame is telling me sell, I will not mind. I will continue. As much as I've locked my entry, I will continue to sell. Even you will see it buy a little. It is still buying. It is still doing that based on the pullback. It's just a pullback. It will never change that trend. At least for now, it will not change that trend. So that market, this market, GBP is still a sell market. It's a sell market for now. Okay, so let's proceed. Let's leave this in. I think I don't know. Someone else raised his hand. I don't know what's his name. Dan. I think I've answered your question. I've done a little justice to it, even though I ate it out.
Yeah, you have, sir.
Yeah, I think this person raised his hand. Prince Steve or something. Are you there now? Can you ask a question so that we hurriedly start?
Evening, sir.
Yeah,
it has been clarified. I want to ask about the trading average before, but it has been clarified.
Okay. So
but
we have used
this trading average, you said the other day you can use 1 or 2, but 2, you say 2 is okay.
This is not trading average. This is moving average.
Yes, it's moving average. Sorry, you said 2 is okay, but yeah, now you just use just one.
I have 2 moving average on my chart.
You said 1 is for the price and the other one is for direction.
Yes.
So I thought it's 1.
You thought it's 1 what? 1 moving average for what?
You said one moving average is for the price and the other one is for direction.
Yes.
Okay, sir. Okay. I understand what you say. Okay.
All right. So let's go to our course for today. Let's move. We're struggling with time. Seriously, we're struggling with time. We have so much to discuss. So let me go off this. Let me stop sharing. Okay, so let's go to our class for today. Let me get the So today we're discussing relative strength index. Okay, so we are talking about Relative strength. Okay, this is relative strength index. Okay, let me share my screen first. Okay, okay, you can see my screen, my slide now. It says the relative strength index is an oscillator that is used to assess the direction of market momentum. Market momentum, the strength of the market. At any point in time, you need to know the strength of the market. It is that strength that tells you if buyers still have the muscle, the push to move the price continuously up, or their strength is reducing. Because your ability to understand this will help you, even if you're seeing a bullish candlestick, you will not be tempted to buy. Because so many persons have always found themselves, their fingers burnt by the fact that they saw a bullish candlestick at a particular point and they entered there to buy. When you ask them, why did you buy this candle? They'll tell you, I saw a bullish candle. You seeing a bullish candle is not a yardstick for you to buy. You might see a bullish candle, and before that time frame has ended, that bullish candle will turn to a bearish candle. So it is not that you have seen a bullish candle that makes you to buy, or you see a red candle or a bearish candle that makes you to sell. The market might be buying, but the market has lost steam or momentum or strength. How do you know that? J. Wallace Welder told us that we'll do that using what is called the RSI. RSI measures the momentum of price. It measures the momentum of price. That is what you call relative strength index does. And even all oscillators, you have the relative strength index, you have the MACD, you have the money flow index, you have the stochastics. All of them measures the strength of the market. That is why sometimes you see that the market is buying aggressively, but the oscillator will be telling you, guy, we don't have strength. You will see that that oscillator will not be buying alongside the price. At that point in time, it is a strategy. That's a very powerful strategy we use as traders. We take advantage of that inequality, of that loss in steam. If you understand how to trade this, that's when we go to divergence. I actually thought we have time to trade this, but let's see how it goes. If you understand how to correlate the relative strength index and the price, or the MACD and the price, or stochastics and the price, or money flow index and the price, now you have, to a great extent, you start having a good trade. You start having a good trade because the price might be telling you, be giving you a fake that look, whereby you have the strength to buy. But the relative strength index will be telling you, no, the guy, that thing does not have strength to buy. Forget that wash. Forget that Shakara is doing. It's speaking to you. If you don't understand the language, it becomes a problem. You cannot interpret price. So all of these things we're talking about now is to help us interpret and analyze price so as to take a decision for a buy or a sell. That's what we are trying to do in this market. Okay, so now we have the relative strength index. Wallace Wida, what he did is that he measures the charts, the whole of the chart, depending on any time frame at all, any time frame, whether 1 minute, whether 15 minutes, whether 10 minutes, whatever, 1 hour, 1 day. He said the chart is measured from 0 to 100, from 0 to 100. And he said, okay, for fairness and equity, if the price get to 70 or 80, that the price has very high potential of reversing. Very high potential of reversing. That is what he said. That when you see price at that point in time, the price have the potential of reversing. That means he said that market is overbought. The market is overbought. But if the price gets to, because what the price is doing, the oscillator is giving you a gauge of what price is doing. And it says if the price get to 30, if the price get to 30, that you as a trader should be very careful while you are selling, because at any point in time, the markets have high potential of reversing. The market has the potential of reversing. So that is why, remember I told you that when I was telling you, when I was sending you our chart, I asked you a question. I said, do you know how to gauge the strength of a trending market? Do you know when the strength of a market is coming to a halt or an end? Do you know how to trade using a very powerful trading oscillator? Do you know what an oscillator is and how it is used to aid your trading strategy? Do you have a strategy trading? Do you have a trading strategy, or do you need one? I promised you that all of these will be answered in the class. Now the question is, what is oscillator? Oscillator is, it is called oscillator because it has its own window. Look at it here. If you look at the screen here, it has, look at this one here. There is a demarcation, there's a line demarcating price, and this other one that has a line. It is called an oscillator because it has its own window from the chart. When we did moving average was placed on the body of the price. But this one is not placed on the body of the price. It has its own window. And it is called oscillator because it's always going up and down, up and down, up and down. That is why it is called an oscillator. So we said, J. Wallace Wida said, this chart is divided into 0 to 100. And when the price is at 70, that price is overbought. And if the price is overbought, means they've bought that market so much. And if they bought that market so much, what will happen? The psychology of traders is that they will start asking, this price is so high, why are we buying it this high? Once that statement is printed in the heart of traders or investors, what they will do is that they will pull out their money from that market. And as they pull out their money from that market, the market will start coming down. So you, as a retail trader, it is not your money that moves the market. But what you need to do is that at what point will these market makers, these investors, these institutional traders pull out their money because this market is that overbought? Oscillator will help you to achieve that. At what point will these investors engage the market for a buy? Why? Because the market is confirmed oversold. Now, oscillator will help you. J. Wallace Wida said, if it is at 70, that the market is overbought, and you'll be looking for opportunity. Remember, I said looking for opportunity. I didn't say when you get to 70, you should sell. No, I said look for opportunity to sell. That is what it means. That means if you are buying, be very cautious because the market could turn anytime. If the market, because when we say 70, the market can actually get to 80. The market can actually get to 90, can get to 100. So, but what we're saying is that once it has gotten to 70, 80, pull your trigger for a sell. Start looking for opportunity to sell that market. And at that point, when you look at the price will be approaching a resistance. And once it has approached a resistance, now you now look for what? Because RSI has given you an overbought situation. Price is at resistance. What are you looking at now? The candlestick that will tell you you want to sell. Then all parameters have been met. Then you engage your market for it. You actually do not need somebody to tell you sell or buy. No. If you understand how these things work, you will not have a problem knowing how to go about this. Okay. So now we said if the market is at 30 or 20, that the market is considered oversold and you need to look for opportunity to buy. If it is at 70, it is overbought. You should look for opportunity to sell. That is what we have said. And J. Wallace Wheeler said that. Now look at the chart. Look at the chart. This chart representation of RSI. Now look at it at this point. Look at this point. When the market got to, this is 7, this is 80. By the time we modify our chart, if you look at this chart here, it's telling you, let me expand it so that I don't know if you can see it very well. Somebody will tell me what I still have is my slide. Okay, I think it's very clear. But you may not, if you're using phone, you need to expand it or bolden it so that you can see it. See, if you can do that now, if you're using a laptop, it will be easy for you to see. Now, if you're using a phone, just expand it so that you see. At this place, you see where I modified it. I said strong sell, sell, neutral, buy, strong buy. Now look at it. I look at where I wrote overbought. This is overbought region, and this is oversold region. It means that when the market gets this place start overbought, that I should be looking for opportunity to sell the market. Now look at this at this point. Look at this. Let's say this is this Euro GBP. Now look at this place. Look at this where you have this line, this line, this line, this high here, this high. Now it corresponded with this high somewhere around here. This one. If you look at this, let me show you something. If you look at this high, this particular one, where you have this doji candlestick here, this is a high that created. Now the market went down, came back again. Now, as at when this market this week was going, this market was a bullish candlestick. It was bullish all body. Now it has taken out the high of this one. Now look at RSI. Look at this high here, which corresponds with this high, the first high. Now look at the market soon. The market started buying and started taking out the previous high. But look at oscillator was not buying the same way with the price. Just looking at this now, even with this bullish candlestick that looks like a marabuzu, it is telling you that guy, this thing that is buying does not have the strength, because this one is supposed to be buying up. It should take out this high, but it did not. It is still down, lower than this high, but this one has created a higher high. And in no distant time, you see the market started selling and selling massively to this point. If you understand this, the RSI, that the market got to overbought, which is about 80 by my chart, that you should be looking for opportunity to sell. You will know that, okay, at this point, the market has started selling, that this market that is buying is just what is called, and is just a wash. It is an abracadabra. It is going to haunt people's stop loss. When you see it, that is when I said that's what they call stop run, broad daylight robbery. That is what this candlestick went to do. But the oscillator is telling you, guy, forget it. It's not going anywhere. We don't have that strength. At this point, when you see, by the time we go to divergence, if you have seen this thing alone and mark your divergence and then confirm that this is a divergence and this market closed below, nothing will make you not engage this market for a sell. Because why? You have seen a divergence, and this is H4 time frame, you have seen or spotted a divergence. At the resistance, it has just shown itself. So this market started selling and selling. Why? Because oscillator told us we have gotten to overbought, one, and two, that price does not have the strength. All those things that price is doing, price does not have the strength to continue buying. That in no distant time, that the sellers will engage the market for a sell. And after that, look at what happened. Market started selling and selling and selling. Okay, so now how do we trade using RSI? How do we trade using RSI? Very simple. RSI, let me plot the RSI on my chart so that we know, watch, listen how you plot the RSI on your chart. Now let's go, let's move. Let me move on. Okay, let me go to, if you want to get RSI on your chart, go to indicators. For those of us using laptop, go to indicators. Now go to relative strength index. But if you have not used it before, you will not see it here. Where you see it is, you go to oscillators. You go to oscillators, not trend now. You go to oscillators. You go to oscillators. You go to oscillators. In oscillators, you will see relative strength index. Okay, you see relative strength index. Click on relative strength index. Now, if you have gotten to relative strength index, please listen, watch, and then follow me up. Now, my relative strength index has been modified already, but I'll tell you how to modify yours if you are with me using the laptop. I'll tell you how to modify yours. What you need to do is, this is parameters, period 14. This is period 14, which is default. Period 14 is default, comes like that. Apply to close of the candle. Now the style, the color, whatever you want to use as a color, it has nothing to do with your trade. The color has nothing to do with trade. It's only color that tickles your fancy, or the color that you like to see on your chart. You can just put the color. You can put red, you can put green, anything you want to put. Just click here, you'll see the color, and then you change the color. Then if you want to thicken the line so that it will be bold enough, you come here and thicken the line. There are different layers you can thicken. Now you go to levels. Now on these levels, I want to remove some of all these things. I want to remove them so that we can proceed. I want to remove these levels. On your own, you will just see, on your own, what you will see on your chart, on your laptop now as we speak, is that you will see only levels 30 and levels 8, 7, sorry, I think 30 and 70. Let me put it, this is 30, this is 30, and this is 70. That's what you see. You just see like this on your chart. But we need to modify it so that it will be easy for us to fit on our chart. So what you do, if you want to add another level, click on this add. Just click on add. Click on add. If you click on add, come here. You will write, you will now type 50. I'll click on add again. I will take this one, I will write 80. Now this one, I'll write 20. Okay. Now on the description, where you have 30, remember we said, J. Wallace Wilder said, once the price has gotten to, once oscillator is at 30, that the market, you should look at opportunity to buy. So I will write buy. What they say, he said, once you get to 70, look for opportunity to sell. I'll write sell. Once it is 50, it is neutral, equilibrium. You say neutral, that the price is at equilibrium or neutral. When it is at 80, we should be looking for opportunity to sell. Okay, no, we've written sell before. Now we say strong sell. When it gets to 20, we should be looking for strong buy. To know that we are on a strong buy zone. Now, when you've done all of these things, you click visualization, all time frame. When you have gotten this, you just click OK on your chart. You see it on my chart now. Look at it on my chart. This is my chart now. This is my chart. So this oscillator ordinarily should be doing what the price is doing. Oscillator should be doing ordinarily what the price is doing. So now, we said when the market gets to 70, that we should be looking for opportunity to sell. If it is at 80, we should be looking for opportunity to sell, a strong opportunity to sell. If it is 30, we should be looking for opportunity to buy. At 20, we should be looking for opportunity to buy. Now, the question is, at what point are we looking for these opportunities? You'll be looking at price. Once price is at a support, once price is getting to your support, you should be looking for, that's why we say know your support and resistance zone. Once price is getting to a support, you should be looking for opportunity to buy. Once price is getting a support, it gives you a strong confirmation if this price, if the oscillator has gotten to 30 or 20. Now look at the rule using the oscillator, that's RSI. The rule is that if price is at 20, look for opportunity to buy. Look for opportunity to buy if price is at 20. If price is at 30, look for opportunity to buy. Look for opportunity to buy. If price get to, if you're buying from 20, let's say you got the market at 20, now you start buying. If you buy the market, it gets to 30. Now, when it gets to 50, the market, what you do now is that there are two things. It's either the market will come down and start selling again, or if the market breaks 50, it has broken a very strong resistance zone, that area of equilibrium. If it breaks it, what you just need is, if you are still on that buy, leave the buy, lock your entry. If it comes back to this 50 line, and did not break below, then you continue your buy, because it will buy to 70 or buy to 80. It will buy to 70 or buy to 80. Now, if you are on this buy, it gets to 80. We said, start looking for opportunity to carry your load and leave the buy zone and start looking for opportunity in the sell zone. That is what we have said. If you're trading using a relative strength index. Now, let me tell you another rule. When the market moved from 20 to 50 and could not break 50, but continued down, do not look for opportunity to buy. Start looking for opportunity to sell within this place. Well, if you're selling, of course, you're selling to 30 or 20, if the market will get to that point. But if you are not, if the market is at this 50, you are not in the buy, do not buy. Only buy, wait, when the market have crossed this 50 or this 50 line or the equilibrium line, then you can initiate your buy to 80 or 70 or even 100, as the case may be. But if you're not, you didn't get this buy from 20, please do not buy now. It's just like as this market is doing this now, Euro GBP, if you're not in the sell, do not sell. Sorry, if you're in the sell, yes, leave your sell. But if you are not in the sell, do not attempt to buy yet. Do not attempt to buy yet until you see price above this 50, this line 50, then you can start looking for opportunity to buy. As you're buying, you know the market will come and take out this high. The previous high it has created and be creating a higher high. It is this RSI, the oscillator, that will tell you if price is creating higher high or not. It is the oscillator that will tell you a great extent if price is creating a higher high, that the market is bullish if you are buying. It is the oscillator to a great extent that will do that for you. It is price, the oscillator, that will do that for you. At the point when you see that it is not creating a higher high, now look at this, look at this, look, let me show you something now. I would have shown you this when we're doing teaching the divergence. But let me just show you what I have just explained. Look at this one is creating lower low, and look at this price. Okay, this price is almost creating. Okay, no. Look at this price. Let me drag from there. Look at this price. Now I like using my this to gauge the line where it is. Okay. Now, so that means if you look at it, it tells me that this thing is coming from here. So I'll drag this into this place. I think somewhere around there. Okay, now if you look at what is happening now, this one is telling you, see, we are going down, we're selling, we're selling, we're selling, selling, selling. And this is towards an area of support. This thing is telling you we're going down, faking you that we're going down. Somebody that does not know will come here and enter this market for the sale. The person just opened his laptop and saw it and say, hey, this market is selling me. Let me enter for the sale. Just enter for the sale. The market will just give you $1, $2. Next thing you see a bullish candlestick, a bearish candlestick coming to that your entry. As you will not see drawdown now, you just see $1, $2. You say, okay, the market will sell. The next minute you see the market started going up. Now, this oscillator has told you now, this one is supposed to be creating a lower low like this other man here. It's supposed to be creating a lower low like this price. But this thing is telling you that sellers does not have the strength to push this market down. That is why it has not taken out this low like price is portraying. It has not taken out this low. What it is just doing is that it is just doing wash. This one is still up. It does not have the strength to push it down. Before you know it, if you see this, before you know you have entered this market for a buy, engage your buy for this market. And of course, you know, since this market have done this swing, if this market is going up, at least what I know about the trade is that this market, based on this other block, is coming back to react at this other block after filling this void here, coming to this other block to react at this other block. And that is what they feel the other block has started coming down and is scaling down up to this point. Okay. All right, so that is what we're saying. I think when I look at this one now, I told you know in UTP Trading Academy, we usually use the current price, unless the current price does not give us any signal. Now look at this current price. Look at this low that this market created here. Now it created, look at another low it has created now. So then now, ordinarily, this price is doing a lower low on a daily time frame. Now look at the oscillator. Oscillator, this is the low that corresponded with that other low. Now look at this. The market, if you look at it, this market is just doing a double bottom here, but this one is doing a lower low. Ordinarily, this one current price now that is happening is supposed to do a lower low like this one. But just looking at this chart or looking at the oscillator, your oscillator is telling you that these guys that are pushing this price down does not have the strength to continue pushing it down for now. Do you understand? Does not have the strength to continue pushing it down for now. If this candlestick close like this, which is a daily time frame, if this candlestick close like this, with this divergence we have seen, you'll be expecting the next candlestick to be a bullish candlestick, because what it wants to create is what we call a morning star. If you remember candlestick pattern we taught, if you create this, leave this a hammer here, or this dragonfly, or this the doji, now it has created a bearish candlestick, a doji. Now we're looking at a bullish candlestick up here now to give us a morning star to continue the buy. Until it happens, if you want to look at that, that means we'll be looking at tomorrow. By the end of the market tomorrow for this week, we'll be looking at if it gives us that morning star. That means you must wait for tomorrow's candlestick to come and play out and complete this movement. If it did not take out this low, then it tells us that this market is creating a morning star. And it creates a morning star, then you now engage your buy. You now engage your buy. But for now, what I have just seen, let's just keep an eye on this chart, that the market wants to create a morning star. You can predict the price even before it plays out. If it does not play out, okay, you know, the chart is not your own. But to a great extent, 70%, 80% sure that this market is about creating a morning star based on what, look at the bearish candlestick, momentum, the one for yesterday, look at the one for today, just telling you that the market is losing steam. The market is losing steam. So we're expecting a bullish run. So look at what the oscillator is telling you that they don't have the strength to go down. That at distant time, you might just be seeing them go up. So that's the RSI for you. That's the RSI for you. Look at it. Now, let's see. So I've just given the rule trading RSI. That the rule, you can actually see it on your slide, that the rule trading RSI is that if the market is at, you see where you enjoy your trade using RSI, this market gets to 20, you see your price at an area of value, and RSI is tilted towards 20 or even below 20. If you catch that market for a buy at that point, if you catch that market for a buy, if you see it for a buy, brother, once the market has given you profit, lock a profit and allow that market to buy up to 50. Allow that market to buy up to 50. By the time we treat divergence, I will tell you that if you are on that 20 and you spot a divergence in a higher time frame, just relax in that market and buy that market up to 50. I don't like, for me, I like being very realistic in price. I like being very realistic. I won't tell you buy up to 80, or the market to get to 80 or 70. But I'm telling you that for a safe trade where you can buy and enjoy your ride and not start having anxiety if this market will buy or not, I know the market will buy up to 50. Then after 50, the market can continue what it's doing. I'll continue to buy, or it will do a pullback and continue to buy. But always know that if you get it at 20, that the market, this thing that the market will buy to 50 is the market doing a swing. If it's a bullish market, it will do a pullback and it will continue. That means that pullback is to gather momentum to break that 50. And once it breaks that 50, it will take out the high it has created before that pullback, then to continue the buy. Because this thing here that's happening now, I've not taken out this previous low. So we're expecting, if it doesn't take out this previous low, like I told you, that at the end of today, this candlestick, market is closing in the next 2 hours or thereabout. 1 hour, 1 hour, 50 minutes. So just roughly 2 hours. If this market does not take out this low, it does not, as in, leave this week, this kind of thing that is happening now on a daily time frame, the candlestick entering this, I am giving you assurance of 70-80% that this thing is going to create a morning star. Unless, we've always, my anticipation for this market, Euro GBP, has always been a buy. But I can tell you that the only thing that is causing this whole issue is the tension between Russia and Ukraine. And these are EU, the European zone, and Euro is affecting the Euro currency so much. And that is why you see most of the Euro currency pairs are all going down. That is just, if technically low, this market is a buy. It has gotten to a yearly low, which I marked as my blue. If it breaks it, then I surrender. Then I will engage. I'll start looking for opportunity to sell. But for now, I still hold a buy bias. I still hold a buy bias. So if this market gives us a morning star, then we know that buy has started. I've just given you a signal. Just give you a signal. You look at it, see what you do with it. So just keep an eye on it. If it creates the morning star, you can tell me that Josh, that market has created a morning star. Let's go and feast. Okay, so that's for RSI. Now, I told you, I was talking about the rule trading RSI. So now I said, if you see it at 50, move from 20 to 50. I say, if you see it at 20, start looking, don't even sell again. Don't sell, look for opportunity to buy. And as you're buying, buy to 50. If it breaks 50, then continue your buy to 70, 80. But if it gets to 80, please, my brothers, 90, even if it gets to 80, start looking at candlestick pattern for a sell. It will sell, it might sell to 50. That sell could be a pullback. It could be a pullback. The market can sell to 50, and before you know it, it will move up again. Taking another 80, going to 100, no problem. But once it gets to 80, and you look at your chart, the chart at an area of value which you have marked, the market has gotten to that point. That's why we say these things are correlated. That's why we took these particular topics, these different topics, selected topics to teach you, so that once you merge one or two together, then you can give a good analysis of the chart. So once it gets to 80, look for opportunity to sell. You're selling to 50 first, which is a pullback. You're selling to 50. Then if the market wants to continue the movement, no problem. But once you get to 50, please take it's an opportunity for you to buy if you want to buy that market. But once it breaks below 50, please do not buy. If you're not in the buy already, do not buy. Sorry, if you're not in the sell already, do not sell. Wait for it. Now, what you are looking at now is that it is going to a buy zone. Look for opportunity to buy. But if you're in that sell, lock your profit. The sell that started from 80, lock your profit and glide down to 30 or 20. If you are not in the sell, do not come to below 50 and start selling. No, unless you want to scalp, not sell. If you are a swing trader or a day trader, do not bother selling. Look for opportunity to buy when it gets to 30 or 20. Unless you scalp, that's when you want to take that small pips run away. Don't justice to relative strength index. Okay, we'll still visit relative strength index. We want to do divergence. I just wish we do divergence today so that we'll be putting our class. Spending so much. Sorry, we'll be taking more of the courses. This intermediate will be clear, then we'll go to advanced. And I've said it, if you have not, let me be sounding it now. If you have not funded your life account, you will not be allowed entrance into the advanced class. What I will tell you is that technical analysis is just 20% of the success. 20% of your success. Another 20% of your success is what is called your risk management. Then 60% of your success is actually in psychology. That's risk management and the psychology we treated in advanced class. If you have not funded the life account, because FSPs have just given you this opportunity, Forex is actually not free. It's actually not free. Learning Forex is actually not free. FSPs have given you the opportunity to learn Forex. You should then only your life account. Because we only train people that are interested in trading. Please mute your mic if you're not talking. FSPs give this opportunity to those ones that want to trade the financial market, and not people that want to come and watch. We don't in advance. We don't talk to people that want to come and watch. We talk to people that want to come and trade, because there you'll be doing analysis and be taking trade. So what we're doing is that, like King asked me, Lee King told me that he placed a trade and he left the trade, and after that, he saw that the trade did well. But when he was looking at the trade was not doing well. But when he left the trade decided doing well. What is that? It's just his psychology. Psychology. This market deals with our psychology so much. Even me that is teaching deals with my psychology. But when you have divorced psychology from trading, then you can start having a good trade. You understand? So these are things we'll be teaching in advance. And what we have taught you in basic and intermediate, we tell you we've given you the jewel of inestimable value. You can actually navigate through the Forex market. But the advance and the mentorship, you will not have the privilege to go in. We are not saying everybody must trade Forex. No, I don't believe everybody must trade Forex. I believe Forex is meant for very few persons to trade. And in the advanced class, if we have 5 or 2 or 3 persons now fund their life account and trade Forex with us, then these are persons we are willing to train, and we hold them during the mentorship to see how they scale through in the business. Yes, so that's what we do. So please, if you have not funded your life account, see reasons to fund your life account. The leverage we have for you is this intermediate class. You can confirm from those ones that are currently in advance, they are enjoying the class. We're now harvesting what you have learned, both in basic, in intermediate, now harnessing it into your psychology, see how well you can treat and treat well. So that is what we do. So I just want to preempt you on this so that you don't have an issue, so that you know that if you've not funded a life account, the intermediate class is best to have with us. Then advanced class for those ones that are funded, will journey with us. And mentorship, I will be taking them deeply into the forex. And that is where I'll be teaching you price language. By that time, I will tell you what you know about support and resistance. Take it and throw it away. Let's start talking about real masterclass forex. I'll be talking about the native levels. In fact, I've just agreed that I'll teach native levels in the mentorship group, mentorship class. That's why I will teach native levels. Because that is the paid class. And that's why I want to teach my native level. I want to teach so many things. I'll teach you FVG. I'll teach you liquid void. I'll teach you FVG. I'll teach you 4 ways price is delivered. 4 ways price is delivered. That 4 ways I will teach you how price is delivered. And that will be during the mentorship. Because I cannot teach that for free. God knows I can't do that. I'm being very realistic. I can't teach it for free. But what will make me teach it for free is only those ones that have funded their life account with the first place. I can just give it as. Okay, so let's move. This is RSI. Let me go to MACD so that if you want to ask me a question, then you can ask me a question on both of them. Let's go straight to MACD. MACD is called, let me get my slide.
What?
MACD is called, who is that now? Okay, MACD is called moving average, convergence, divergence. Moving average, convergence, divergence. That is what MACD means. MACD has components of, can you see my chart? Component of MACD is the moving average, the MACD main line, the MACD signal line, the histogram, the equilibrium, or the zero line. That is MACD. MACD, component of MACD is a MACD main line, MACD signal line, MACD histogram, and the equilibrium or the zero line. Now, these are the components of MACD. Now, if you look at MACD, this is a chart, pure chart. This is MACD. If you look at it, you see this thing, they say the red one is called the signal line, while the blue one is called the main MACD line. MACD line. If you look at the histogram, this is the histogram, where you have the green and the red. The green and the red, they are called histogram. This thing is called histogram, the green and the red. When the market is selling, you see a red histogram. If it is buying, you see a green histogram, telling you the market is buying, and red means the market is selling. Now, there is a line that is between the histogram and, sorry, the bullish histogram and the bearish histogram. Yeah? Instead of the two of them, I remove the Wi-Fi. Now, if the histogram, there is a thin line that is between the bullish histogram and the bearish histogram. That line is what is called the zero line or the equilibrium. The zero line or the equilibrium. That is what it is. Now look at the trading strategy using MACD. You have the MACD crossovers, you have the histogram reversal, or have process of moving average above or below the equilibrium of zero line. There are different ways to trade it. The MACD crossover between two lines provides buy and sell signals. As with most crossover strategies, a buy signal comes when the shorter time moving average does the more reactive line. In the case, the MACD line crosses above the slower line, the MACD main line. Conversely, when the MACD line crosses below the signal line, it provides a bearish sell signal. I told you I don't like this theory. Let's go to the chart and explain all of these things. Histogram, I'll tell you about histogram reversal. You can read it if you have the slide. This equilibrium of zero crosses. We'll discuss it when we get to chat. So you can, if you don't have the manual, you can chat me privately so that I'll send you the manual. Okay, so let's go. So now we have to plot our MACD on our chart. I think I'll need, after a while, after the class, I'll need like 10 minutes. For those ones that use this form, we'll see how we can plot the RSI and the MACD so that everybody will be on the same page. Okay, now, if you are using the chart, now let's go to our oscillator. This oscillator. I'll click on the oscillator. I'll have I'll go to oscillator, I'll click on indicator, I'll go to oscillator. And the oscillator will look for MACD. This is MACD. This is MACD. MACD. Everything, just leave it. Everything is default. It's default. So just click OK. What you just need to do is click OK. This is the MACD, the CARICOM MACD. This is CARICOM MACD. This is the CARICOM MACD. This is CARICOM MACD. That's the one that comes with your MetaTrader 4. That's the MACD. But if you actually want to, get, if you actually want to get, if you actually want to get, let me share it. Okay, so let's continue. If let me finish my story. Now, if you want to get, this is the MACD, but ordinarily I have one. We have one MACD, which is called triple MACD. Triple MACD. We'll have triple MACD. Now, in triple MACD, let me bring it out. I'll tell you how I got it. Triple MACD. It is triple MACD. We have triple MACD. So just right, mark this. No, my assistant. Okay. Now, I said this is a chart of the one I looked at. You can actually use it. Let's use it. Okay, this is the RSI. I did the last time I did the MACD. So let me go and get the MACD. That's the one that comes to the system. I'll just say okay. So that's the MACD that comes to the system. Now I said I have one that we can use, that I usually use, which is typical MACD. I will bring the two of them so that you don't see the difference. Now, typical MACD is typical MACD. I'll click on it. Okay, so now this is my typical MACD. This typical MACD. This is the one. The first one is the one that came with the system. One that came with the system. And this is. Hope you can see my chart and it's clear, right? My chart is clear now. This my system. So now this is typical MACD. Now look at it now. Let me show you RSI. This Euro NZ daily. Look at RSI. Are you seeing RSI now? RSI is tipping towards what, 20? Are you seeing it? Hello? Hello, is somebody saying this?
Yes, sir, I'm seeing it.
Okay, you see RSI is tipping towards 20. That's why I said if you're in the sell, lock your entry and wait. Just be looking for opportunity to sell. What you're looking at is opportunity to buy. So the opportunity to buy the market because RSI is tipping towards 20. And if you look at my chart, this thing is coming towards a support. If I draw this support somewhere here now. Yes, sir. Now, if I draw my support somewhere here, I take my support to this place, which is here that have this low. You'll see that this market is coming towards this place. Ordinarily, if I'm not using what's it called, RSI, I will see that this place is the next support that this market is possibly coming to. Since it has broken all of this, it's coming to this support, coming to this point, which is 1.6900. That's where the price is coming to. Yeah, you see that when you look at this, some persons will tell you this market has sold for too long. Let me not sell it. Where was I when it was 200 period moving average, 150 period moving average? And look at market has sold to this point. Some persons will say, okay, let me wait for it around this place for a buy. Why some scalpers will say, let me enter the market and buy shorts or sell shorts. Whatever it is your decision. But some persons, some disciplined traders, which is their strategy, will say, no, I'll wait for this opportunity for a buy. Why? RSI is tilting towards 20. And once that is happening, we're looking for what? A buy opportunity. Now, let us go to, I just use this one now to give example. Now, let us go to MACD. MACD said we'll have this, but this is MACD. Look at the histogram. Why I would like this is that this one is more, this one has a fizzy more than the one that came with the MetaTrader 4 by default. This one, you see, this one have two moving averages where you can talk about the cross. This one does not have two moving averages. This one, the histogram is not differentiated except to look at the low and the high. But this one, the red is for the sell, the green is for the buy. So that's basically the difference. But they can, if you understand how to use MACD, all of these things, you can use even this one, that's this one. But for the sake of beauty of the chart, we prefer using this because this one gives us more information. Okay, now look at this one. These are two moving averages, the red. So let me remove this since I have discussed the difference. Let me remove this. Now, this is the moving average for MACD. This is the moving average, while this is the histogram. Of course, we know what is histogram. We all attended the primary school. This histogram, if you see the histogram below, it tells you it's a selling bias. If you see it above, it tells you it's a buy bias, that the market is buying. But before the market will start buying, you will see that the histogram which is red, which is below equilibrium. When I say equilibrium, is that line that demarcates the up and the down. So once price is below the equilibrium, you can actually take your buy, believing that the market will come and break above equilibrium. If it breaks above equilibrium, you know that your direction now is a confirmed deal, is a done deal. Then you remain in that market, buying that packet. If it crosses equilibrium, okay. Now let me show you the trading strategy using it. Now, once you see this histogram, you see that the histogram will be shrinking, will be reducing in size. Once you see that histogram reducing in size, going towards equilibrium, it tells you that the strength of the sellers is coming to an end, that the buyers are already in the market. If you want to trade using histogram, MACD, you will wait until this market has taken come to this up. But if you are looking at price action, you will see that this will correspond to this low. Look at it here, this low, this place here, this one here. Look at it on the chart. Use that line. Use that line. Look at it on the chart. Look at it on the chart. This line here. This is the highest place. This is the highest bearish candlestick. If you look at it, that's the highest bearish that had momentum. But even at that, when this thing was happening, look at this one. This one has momentum. This bearish candlestick has momentum. But it's telling you that, MACD is telling you that this market, even though it is selling, price is telling you they are selling. MACD is telling you that that thing is losing steam. Look at the RSI. Look at RSI. RSI is telling you, guy, see, this thing is not creating lower low. I just wish somebody is understanding me. Look at this market. Let me show you. This market, look at this low here. Now, let me show you another low. You take this low now to this candlestick, even this one here, this one. You see, that's where you have the line. You see that this market was creating lower low, lower low. Oscillator is supposed to be creating lower low. Look at this one. This one, instead of creating a lower low from here, this one coming somewhere around here. It did not. Instead, look at it, it's going up. Telling you that this thing that you think is going down is not going down. We want to go up. Now look at the histogram. Look at histogram from here, from this point. Histogram started going up instead of going down, following the oscillator, telling you that, see, this market you're saying that it's doing as if it's selling. It is a lie. It is buying. We want to buy. We don't have the strength to sell. The market bought and did the same thing here. Look at it again. Did the same thing here. Look at this one, came lower than even the previous one went to. It came lower than this previous one. Now, this one, instead of going lower, this one started going higher. This one started going higher. Look at it, started going higher to this place. This one, look at it, started coming higher this way. Have you seen it? Telling you that, see, these guys that say they are selling, it's not true. They're not selling. They don't have the strength to sell. The buyers are in charge of the market. If you had seen this ranging within this place, brother, if I see this thing on a daily time frame, by extension, I'm teaching divergence, but it's just that I've not given you the rule of divergence. If you see this thing at this place, at this time frame, again, my brother, engage the market for a buy. You enjoy a good ride. This place, this is that is happening. I'm just giving you a week to put your stop loss for a buy. And this is happening in a daily time frame. So for when it happened, 1, 2, 3, 4, 1, 2, 3, 4, 5, 6, 7, 7 days, 1 week and some days, the market bought and bought and bought and bought the milk of the market. People cashed out, seriously. Okay. So that's MACD.
Check how many pips.
MACD, I should check how many pips. What did you want to spend somebody money do?
Yes.
Did you enter? What do you want to do with somebody?
Okay, Josh.
Okay, let me show you the pip now. 582 pips. 582 pips. Very massive. Like I told the last class, I said, if I see a divergence in a higher time frame in D1, oh Jesus. See, I will invest my money there. I will invest my money there. By the time we teach divergence, brother, even if it is only divergence we use as a reversal pattern, Divergence is a leading indicator. If you understand it and backtest it very well, if you see divergence in H4, in D1, in weekly and in monthly, what will make you not enter that market? Just tell yourself that village people are at work. Tell yourself village people are at work. If you don't enter that market, if I see it, I don't spare it. God knows I don't spare it. Unless I don't see it. That's why we're saying we teach you to create signals yourself, so that you will tell me, that was you. I'm seeing divergence in so time frame. I will go and look at it, and we'll make money together. Because I'm not looking at all the pairs. I'm not looking at all this is I'm telling you. It's not as if I traded them. You understand? I don't trade them. But if I see it on the chart I am looking at, because this doesn't come always, but if it comes, you take advantage of it. Okay, so now let me show you now. We are talking about the MACD. Once you see the MACD line is the green or blue or whatever it is. For somebody who tell me this is tortoise blue, whatever blue is this line I'm talking about. This line, the red one is the signal line. Once the MACD, which is the fastest line, crosses the signal line from below, it's just like what we did moving average on our chart. The moving average crossover, that's the same thing. Once you see MACD, the MACD line crosses the signal line from below, it's a buy bias. It gives you a signal for a buy. If you see it cross from above, look at it from above here, it gives you a sell bias. It gives you a sell bias. And when you see this thing cross, first thing, it is, look, you're looking at it coming to equilibrium. If it is RSI, I say coming to 50, it is coming to equilibrium first. If it breaks equilibrium and the two moving average crosses equilibrium, brother, it is finished. It is finished. You know, Jesus Christ, when he came to die for our sins, when they impaled him and he died, he said, God, my Father, it is finished. That market is finished. Remain in that market for a buy. If you see the two moving average cross above the equilibrium or the zero line, that's what we call about the strategy, zero cross. Once it crosses the zero line or the equilibrium line, it gives you a strong bias for a buy. It gives you a bias for a buy. It gives you a bias for a buy. And if it crosses below, it gives you a bias for a sell. And as this thing is crossing, you are looking at the histogram. Is the histogram printing very strong? If you look at the histogram, this bearish candlestick, where this trend line is, this one where it is, if you see it, it is thicker than the next one. The next one is faint. Did you observe that? I want to believe you observed that. The next one is faint. Why this one is thicker? Why is it getting faint? Because it's fading. It's fading away. The momentum is fading. So that's why I told you I like this simple MACD. It's fading away. It tells you when the strength is fading. So the strength is fading, and it's fading. The histogram started shrinking, started reducing its size before it got to what? And by then, this thing has crossed. The MACD line has crossed the signal line for a buy. So you enjoy your buy at that point in time. Look at the current price now. Look at the current price. Let me show you. Look at where the MACD line crosses the signal line. Look at this at this point. Look at this at this point. This market is sold. It's sold and sold and sold and sold and sold. That's why I told you, if you understand anything you understand, you can trade it. This market at this point, this is Euro NZD. This bearish candlestick here created what is called a dark cloud cover. A dark cloud cover. If you understand dark cloud cover and candlestick pattern, you would have engaged yourself using this week as a stop loss. The market said you would have remained in that sell. If you say, okay, no problem, I want to use RSI for my sell. Now, look at RSI. RSI came here to give you a sell opportunity. Market got to 80. Look at it, RSI gave you a sell opportunity, which you would have engaged yourself. If not, somewhere around there, you would have engaged yourself. Now, MACD came here. Look at where MACD gave a sell signal. MACD crossed from below. From above, It gave a sell signal when this market did the pullback and continued the sell. Since then, MACD, have you seen that MACD has crossed equilibrium? Have you seen that MACD has crossed equilibrium as we speak? It has crossed equilibrium. So if you were selling that and you see MACD, the two moving average cross equilibrium, and as it cross equilibrium, you see them widening apart. That widening apart, that space they are creating, that thing they are widening apart like this, tells you momentum in the market. So if you were in this sell, you should be enjoying your ride selling this market at this point. You have sold this market. And when you see it crossed, you see the histogram started shrinking. Shrink at that point when the market crossed, the market started creating. If you look at the histogram, it is very thick, telling you the sell is still active. Sell is still active. Why this one is telling you, yes, we are selling, but the buy will soon go. This one, if you're trading with MACD has not given you a signal for a sell. But RSI has never given you a signal for a sell. Don't get it twisted. For a buy, I mean, it does not give you a signal for a buy because this thing can buy to 20 and even to 10. So they can sell to 20 to 10. What you are looking for is, once you have seen this thing, the market create a low, then go up again, create another low. Now you have seen divergence. You engage your market for a buy. You engage your market for a buy. So that is what we're saying. So when you see this is MACD. Once you see MACD is still telling us the market is bearish. Is bearish. So I am not saying you should buy. I say look for opportunity to buy. I say based on the previous low, this is where this market is coming to. Possibly tomorrow, next week, Monday, Tuesday, this market might get to this point. If it doesn't get to this point tomorrow, this Euro NZD, if it doesn't get to this point by tomorrow, then by Monday, Tuesday, this market will get to this point. They will be looking for opportunity to buy. Then you'll see that the histogram will now be fading away, fading. Then this one would have turned, the MACD line would have turned to cross this signal line. When this thing get to this point, you see the histogram will shrink, will change this thing going towards the equilibrium. This one would have crossed for a buy. Now, my RSI would have given you a buy bias, would have given you a buy bias. It would have touched 20 or even 10 and start raising it up. So at that point, you know you are initiating your buy, your buy direction. So that's what we're looking out for. We're looking out for the buy. But for now, the sell is still active. The sell for Euro NZD is still active. See, we're doing analysis by extension. Okay, so now we use even the MACD. Okay, we're not talking about divergence yet. So that's how to trade using the MACD. Now I want to tell another secret using MACD. If you are on a daily time frame, and MACD have crossed, look at it, MACD have crossed like this on a daily time frame. Now tilting towards the equilibrium. What you need to do is that go to a lower time frame like H1. You will see that H1 has given you opportunity for a buy. If you see MACD cross in H1, sorry, in D1, please, when you go to a lower time frame, always look for opportunity to buy. And if it buys and crosses the equilibrium in that H1, know that you are in that buy. But if MACD, in D1 crosses equilibrium like it has happened now, the current price, it has crossed equilibrium from below, then you know that market. In fact, you need to take a more careful to engage that market, to enjoy your ride. Look at where it crosses from below, crosses the equilibrium. Look at it. At this point, that's where it crossed the equilibrium. Look at it at this point. It crossed the equilibrium. And if you look at that point where it crossed the equilibrium, it tallied the 200 period moving average. The price was below the 200 period moving average. MACD crossed equilibrium. Then at that point, say goodbye to buying and engage the sell and sell and sell and sell. And that is what is happening in the market. All right, so we're giving MACD trading strategy. We've talked about the histogram, shrinking of the histogram. We've talked about histogram crossover. We've talked about moving average crossover for MACD and how to trade it, the trading strategy. Okay, so we'll give room for question now, so that after the question, Okay, before the question, let me go to my phone and let's see how we trade the MACD and the moving average. Sorry, the MACD and the RSI. How to put it on our chart, not how to trade it, because we've explained it. How to put it on our chart. That's what we want to do. Okay, so now let me go off this share and now go to, let me go off this share. Now share with my phone. Go off this share with my phone. Okay, so I said I want to. The people that were in that this we were talking about the GBP chef. When I give that example using moving average in each one because D1 was selling. Are you seeing it now? Have you seen that the market sold because that 50 period moving average, the market started selling. So that because it's aligning with the higher time frame. We saw it when the market when it was bullish and it was just on top there, and see the market have sold and it's selling and it's selling. It's just going to do a handshake now to continue the sell for GBP chef. So that's what we're saying. If you are, okay, let me not go to moving average again. Let's go. Okay, so I want to put, what's it called, RSI on our chart. Now go to the F, that F you have seen on my right screen, the F. If you have seen the F, you click on the F. The way we put our moving average, go to that same F, go click on the F also, you see it's F plus. You click on the F plus, then you look for oscillator. On oscillator, you will see the relative strength index. Click on the relative strength index. I've clicked on it. You see the period is 14. Apply to close, same thing, all of that. You now want to go to my levels. Look at my levels. Even on my phone, I've already modified my level. But be it as it is, let's remove it and know what to do. Now I'll say the same thing the way we did on the chart. I know some persons will tell me, do it now. Do it. Persons will say, do it now. Just do it. Let me just do it. Somebody will say, okay, now I've done that. Have you seen it now? It is empty. It is empty. Your own your own might just be a default of 20. You understand? 20 and 17 or 30 and 70, like I said. But I'll need to add them. I'll click on the level. I'll put 30. I'll put 30. I'll say next. Look at the next here on my right. Next, I'll put 70. I'll put next. Don't worry about whether you arrange them. System will do the arranging. Don't worry. You put 50. You go to the next one. You put 80. You go to the next one. You put which one have I not put? 20, right? 20. So I'm done. I'll click done. Then I'll go to description. Description. I'll click on description. On description, what am I writing? This is 20, right? I'll go to description. 20 is, am I correct? 20 is buy. No, 20 is strong buy. Strong buy. Next. How do I know which one is which one now? Strong buy. Let me see. Okay, let me go back. Okay, 30, we have 30, 70, 50, 80, and 20. Okay, 30, 70, 50, 80, 20. 30, 70, 20 is the last, 80. Okay, so this 30 is a buy, not strong buy. It's a buy. The next one is 70, is a sell. The next one is 50, is neutral. Next one is 80, strong sell.
Strong sell.
Strong sell. Next one is 20, strong buy.
Okay.
Down. So have you seen it now? So we have our RSI now on our chart. So what we need to do now is go. Oh, no, no. So what we need to do now is go add it to. Juliet is entering the room by this time. The Lord is his strength. Okay, so we'll go over and say. We've clicked on, so we need to go back and see what happens. Done. Go to done. Click on the done. That's when I did the issue. But you know how I did it now because I only want to go back again. So let me just go back. So I will see it. Levels. Have 50, 50, 80, and let's have 20. 30. 30 is high. Next one is sell. Next one is neutral. Next one is strong sell. Next one is strong buy. Let's drink this color. I want to change to white. Let's look at this. We'll go to so we'll go to dawn. Okay, now if you look at my chart now, you'll see 20, 30, 50, 70, and 80. 70 and 80. So this is GBP chef we're talking about. And I say GBP chef is bearish because the higher time frame is bearish. So what we're looking at, have you seen that GBP chef is at 30? It's at 30. But I said at 30, we should be preparing to buy. But I didn't say you should buy. Take notes, that's two different things. I did not say you should buy. We're looking for opportunity to buy. If the market gives us opportunity to buy, then we'll buy. If it does not, then we'll leave. So you'll be looking at your price, be looking at oscillator. So now, when you look at this now, you see that if you understand what we have been talking, when we talk about area of value, that support resistance, you see that this market is coming to what is called my order block. You see that when you look down, that swing that took it up, that is coming to do a pullback. Now, this thing is now, what will happen is that it is coming, possibly first for me, it's coming to that order block, which is that bearish candlestick, the range within the bearish candlestick that moved the market up before the bullish run. So that is the order block. The market is coming to that order block. So for this market now to settle that order block, the market might get to 20 or even 10 before I start saying, oh, I need to buy the market. That is for RSI. So I've just showed you how to place the RSI. Then let's go to how to get the MACD on our chart. The MACD on our chart. If you cannot trade triple MACD on your chart. No, you cannot trade triple MACD. The one I use is only those using laptop that have that benefit of getting triple MACD. If you're using phone, you definitely take the one that comes from the MetaTrader 4. So how do we go? Let's go the same way. Please, that person that is unmuting his mic. I just don't understand. Okay, so now let's proceed. You go to that same F, the same F. Anything you want to do trend indicator, oscillator, go to that F, click on the F. Now I want to remove the relative strength index. Let me remove it. I told you how to remove it. Go to your box, that sewage disposal. Tick on the box and click, go back to that sewage disposal and click it. It has gone. So I want to go back and get my MACD. I'll click on that F plus. I'll click on the F plus. I'll look for MACD, oscillator, look at MACD, MACD. I'll click on MACD. I told you it's default. Don't worry about it. It's default. So what will happen is that we'll just click OK. Done. Okay, now look at the MACD, the way it was on my chart on the laptop. That is how it is. And look at MACD now. Based on this, the MACD is about crossing equilibrium. It's about crossing equilibrium. Have you seen now? Telling us the bearish market is crossing equilibrium to continue the sell. So that is how we place the MACD and the relative strength index on our chart using the phone. Okay, I wanted to go off the phone now so that we take question. Okay, so please, I want to take question. I wish if we can, this is almost 9:50, 5:59. We've almost exhausted 2 hours. But let's take question. We're taking the next 10 minutes to take questions. Ask.
Hello, sir.
Yes. Who is
Sir,
asking?
that other block is Cynthia.
Yeah, Cynthia.
That other block is what I'm not too clear about. That other block you are mentioning.
Cynthia, say you have you funded your life account?
I'll do that tomorrow.
Okay. See, what will happen is that for now, just trade using support and resistance. I said most of those things I'll teach them in the mentorship group. That's after you advance. Then after advance, then I'll give you other benefits, you
Right.
You understand? So it's for those ones that have traded, funded their life account. We'll be teaching all of that. I assure you, we'll be teaching that. Other block is a course on its own. We're going to take you through that, and that's for those, specifically for those that have funded their life account with FX Space. That's the best we can do for them. But we are still giving all the knowledge free of charge. We'll do support and resistance and the trading. We'll teach you that you get to know you're with us, and others that will still be with us. Yes. Yeah, welcome. All right, next question, please. Question. No question. That's nice. That is interesting. That means everybody understood the course. Any question? I'm giving the next 1 minute. If I don't get any hand up or somebody asking question, then we'll officially call the class close. Question, 1 minute. This is 10:01 by my time. So once it gets to 10:02, then we know we have done justice to our relative strength index and MACD. So that come, the next time we'll have classes, tomorrow is Friday, we don't have class. Next time we'll have class again will be on Monday. Come Monday, we'll be teaching you divergence and if possible, Fibonacci. Teaching you divergence and Fibonacci. You'll see the powerful effect of divergence. It's a leading indicator. It's a leading. We'll just give you the rule. We'll just carry the Bible and give to you and say that is the Bible for divergence. It is found in the slide. So you can actually request for your slide, read that divergence, understand divergence very well so that by the time we come and we're discussing, it will be flowing. This is divergence. This is divergence. It's a very simple strategy, or it works wonderfully. This divergence. This divergence. This is the Bible we'll hand over to you, and this is the explanation of divergence. We'll have different types of divergence, which has been explained here, and how to trade it. Okay. So question. Okay, I wasn't really sharing the screen, sir. Let me show you. Now, I said this is the divergence. Look at divergence here. The explanation, types of divergence, these different types of divergence explained and how to trade it. Now look at the Bible. We'll hand over to you and say this is the Bible for trading divergence. Come, don't miss the class on Monday for no reason. you will be glad you did. And if possible, we're going to pick Fibonacci. Okay, the chart pattern is something we need to take our time. In fact, next week we use it to teach that chart pattern very well. You will see chart patterns. You will see this market issues. Okay, question. Okay, this is 10:03. Okay, there's no question. Thank you very much, everyone. I believe we gave you value for your time. Thank you, and do have a very beautiful day. Good night rest.
Sir George.
Yes, Mr. Michael, I know I'm still
Sir George.
Yes.
You are still owing me.
Yes, I think we need to. Okay, yes, Mike. Yeah, same thing is the. Yes, Mike, don't go out of the room so that we'll see what it's. Let's do it now. This evening. Do you hear me?
Okay.
Yes. All right. So others, you can log out. I think we have finished the class. But, we'll see what we do. Michael, he wants to open it. Good evening, everyone. Have a good night rest. See you on Monday when we'll be discussing that. Until then, you have a beautiful night rest. From UTB Trading Academy. See, isn't it? Isn't it? Please log in. Enter the room. Yes. Enter. I need Izine to enter the room so that she can take over. Let me. Okay, I think Izine is in the room now. I need you, Michael, you need to share your screen so that we'll see what the issue is. Izine, please unmute yourself.
You have to make me a co-host.
Yes, I'll make you co-host. Izine.
Yes.
Izine, please, Michael wants to open his account, but I think his account is having issues. So just know what is the issue with the account. Okay, let me make Michael co-host. Huh?
Please, I'm not logged in with my laptop. Has he finished? Can he share his screen?
Yes, he's sharing screen now. We'll finish the class. Michael, please share your screen. Okay, wait. Before you share your screen, let me go off the record.